Greetings, guys and gals. Join me here at Success Over Stress, where the goal is to strengthen strategies that will defeat doubt, cure complacency, and strangle stress. I'm on the road to a healthier, happier, and stress controlled life by taking control of my financial situation. With the right direction, so can you.
Okay. Hello, ladies and gentlemen. Thank you for coming and visiting with me on today, November the 9th, 2022. This is a quick podcast. I'm Eric with Success Over Stress. You know me. No, you don't. You might. All right. So, my profession, my that I train for, my skill profession, I'm a physical therapist. But I have also dabbled in real estate, and now I'm working to really understand the markets. So yesterday I did a little bit of trading. That was November the 8th. I did a little bit of trading. I traded on DWAC, Digital World Acquisition Corporation, and so I actually posted some messages on Twitter as I was trading. So some of you guys asked me, why'd you get in? Where'd you get in? What's going on? And so I'm not a professional trader, and this is not trading advice. I'm not your financial advisor, and you should have one. But you know, and I'm not great by any measure, but I'm certainly willing to, give you guys some insight on some of the things I look for when I'm trading. And my primary method of trading is I'm a day trader, and my strategy is really getting in, getting out. I don't ride. I'm not a trend trader. I don't ride big waves. You might call me a scalper, right? So looking for one candle, two candle moves. But what I did yesterday was got in at a few places, or identified a few places, and I'll just kind of share with you why I came up with those, and so you can see the result. All right, so a few things I just want to point out. So again, we're talking about DWAC. It's traded on the NASDAQ exchange primarily. DWAC is Digital World Acquisition Corp. And it's actually a SPAC. So it's a special purpose acquisition company that got together with Trump's company. And now Trump's social platform, Donald Trump, former president, his social platform is Truth Social. The parent company is Trump Media, right? So Donald Trump wanted to have his own way of getting information out to the public without having so many limitations or restrictions on what he could say, what he couldn't say, that kind of thing. So, when the company isn't doing what you need them to do, build your own company, right? So that's kind of what he's doing. And, that's okay. He can do his thing. But what happened with DWAC, again, so it's a SPAC, a special purpose acquisition company, which is pretty much like a shell company that's on the exchange, probably not really doing anything, but it's there. And then a company that's interested in being on the exchange fairly quickly, they can partner with these guys, and then, they can be publicly traded. So that's what Trump did. And gosh, I had some notes, misplaced some notes, but it looked like they were, I guess what was going on last week was that around last week, they were supposed to be doing another vote on whether or not they could get another extension to complete the merger. So I guess the merger hasn't completed fully, but now this would be the sixth vote to do a year extension on completing the merger. Why the merger? Why it hasn't already happened yet? I don't know. I mean, my speculation is that the company is most valuable when Donald Trump is in office, when he has something to say. When he's not in office, and or people aren't really interested in what he's saying, then the company doesn't have as much value. I mean, Trump media, right? I mean, it's his company. I mean, it's his outlet to what he wants to say. So if he's not in office, or if he's not in an important role, or if he doesn't have a lot to say, then the value of the company is going to be less. To me, that makes sense. So the stock went up initially back way when, and then the stock steadily went down, and then eventually it kind of came down to a kind of like a resting point, a lowish place, and then got a little bit of news, and it popped up. I think like 79% or something is what I saw that it went up. But the average trading volume for this stock has been around 1.8 million. I guess it was less than that prior to these recent trading days of high volume. Market cap of 878 million. So that puts it in the, what is that? That's a small cap, right? Small cap is like 250 million to 2 billion. Yeah, so that puts it in a small cap. And then mid cap stocks are between, I think it's 2 billion and 10 billion. Or is that mid cap? Mid cap is small is under, no, small is 250 to 2, and then 2 to 10 is mid, and then yeah, so it's a small cap. Yeah. All right. Small cap stock. All right. So anyway, and one of the things I've heard, and I get it. I do want to have a good understanding of the market, but one of the things I've heard from some of the professional traders is that you don't necessarily have to have a superb understanding of business or finance or anything like that to be a pretty good trader, but it is important to understand some of the fundamentals of the market structure and that kind of thing, which doesn't necessarily come with understanding market caps. But some stocks move differently. Small caps move differently than mid caps, than large caps. Some of these stocks that are really small, or overseas stocks that have no liquidity, they can be troublesome. I learned something the other day. I think it's an ADR. I forget what it was called. Asian Direct something. Let's see what it is. ADR, because I was looking at that, and that also is, I think it was almost kind of like a shell company too. It's for companies that are overseas that want to trade on the United States Stock Exchange. They get into what's called, I think it was an ADR. Oh no, why did I say Asian? American Depository Receipt. Anyway, the stock that I was trading was from an Asian company. I think it was the 9, trading under NCTY. Bad one to be in, just telling you. But American Depository Receipt. And so that's why I like doing these podcasts, because I learned something doing them also. Again, I'm not an expert, so if you follow me, you do it at your own expense. All right. So let's go to the chart. Let me show you what I've done. All right. Share my screen. Bam. Just gonna share that. All right. So DWAC again. Okay, so again, here we are. Okay, so again, here we are, DWAC. Now, all right, DWAC, here we go. And I'm looking at the 1 minute daily chart. And this is what I noted today. And I was actually at the gym today, and I saw this here going on. So I made a couple notes. ABS for me means absorption absorption. So here there was a large influx of orders happening, and the volume came in, and there was just no movement. Okay, so that's absorption. All right, that absorption coupled with a retracement, a quick wick, can give you a pretty good indication that the stock is going to move up. All right, but I traded yesterday, and let's see. Yesterday looked like this. Oh, it was a mess. All right, but let's see overall what it looked like. What it looked like. All right, let's get this out of here. We're just convoluting things. Show trade, supply off. All right, so like I said, the stock started off here. So I thought it's been around for longer than a year. Let's see, 3 weeks. Yeah. Okay, back 927, not much longer. But when it first came out, boom, it started around 14 or 20. I remember that day too. I was working, and I was, I day trade in between work, and when I have a break here or there, just looking at the charts, and I saw this thing starting to go up. Man, now this obviously wasn't. I don't think this was one day. It was a couple days that it did this, but around $10 or $11, and then shot all the way up to what, $180 or so. That's crazy. And then it came down, pulled back, went up, found resistance around $900. Now it's been coming down steadily ever since. That's a pretty good size volume bar right there on a potential slowdown of this move down. Okay, so I didn't even notice that there. You got this area here, which is kind of support, which is where it started at. Okay, and so I guess the stock came back down to here, found a little bit of support, and then bumped up. All right, but what we're looking at today is what happened yesterday. All right, so here, all right, I already identified a few areas. The areas I identified are here, here, and here. Those are areas that look like the best potential position to take along. And if you look at what I have set up, now these are my own custom strategies that I developed using ThinkScript. It's kind of like coding, right? And you can come up with it yourself. And I came up with this one. I came up with this one. I came up with this one. And then this is the RSI that you guys probably already know and love. What is it? Relative strength indicator or index. I don't use it very much. I put it on here. I don't use it very much. All right, let's see if we can get that off. Relative. Yeah, get you out of there. Get you out of there. All right, but I do use these ATR by volume. I don't use that one as much, but I do look at the wick ratio plot, and I definitely look at the spread wizard. Spread wizard is probably the one that I look at the most, in addition to the price action. All right, so all right, if you look here, being a good place to get in, you see that my wick ratio plot identified that. Okay, and if you look here as another good place dip to get in at, you'll see that my my wick ratio plot identified that as well. And then also here, a good place to get in at, it was identified by the wick ratio plot as well. All right, it's not an exact science. It doesn't work every time. Look, here could have got in, and you might have got in there and made a little bit of money. Let's see. But look, down here, if you had got in right here, no dice, right? If you had got in here, you could be in a potential position to go up a little bit or hold it for a longer move. So, I mean, the strategy, the script works pretty well, but I like to couple that with a few other things. I like to couple that with the with my spread wizard, which the spread wizard is pretty much just when you have you guys all know what the spread is. The spread is the spread. It's the difference. It's the difference. Bid, ask. The bid is how much somebody's willing to pay. Ask is how much somebody's willing to take. Right. So the difference is the spread. If you have a large spread, That means that I'm trying to buy something, you're trying to sell something, we're far apart. So anything can happen. Anything can happen. At that point, I could lose my job or something. And then all of a sudden, I'm willing to take just whatever because I need some money, right? So I could go from being here all the way up here right away. Volatility, right? It could happen in reverse as well. But so when you have the bid and the spread that far apart, that high spread, like I said, volatility is near and dear. And it's probably not a great place to trade on a day trade because it could smack in either direction really quickly. And, you know, you kind of, you could take a loss. You could take a big loss right then. So don't want to do that. So as this thing is going up, as the spread, even though we see the stock going up, you're like, oh man, I want to get in. Yeah, probably not, because this spread is starting to get pretty big here. So you need to wait. You need to wait for a pullback. All right, but then let's see. We're gonna zoom in here. All right, so as it goes down, you're like, okay, well, it contracted a little bit here. Should I get in there? Maybe, but what's the price action saying? Okay, goes down a little bit. Should I get in here? Maybe, but what's the price action saying? Now, in this case, I might have would have got in because this price action here, we saw a really large order. That's what this black box is here, is a really large order. And it's probably on the scale of a market order or an ask. That's usually when I put the black box there. Okay, so I might have would have got in there. Plus, look, it already started to be indicated on my wick ratio plot. So I might have got in here, but this is such a long wick, you probably need to wait. And then right after that, we got a few rests, right? These blue bars, and all I'm doing is taking this, creating a different bar, okay? And I can go whatever color, okay? So, hey, don't you be doing that. Don't you be making trades. All right. So again, now I have a gaming mouse, and you can set this thing up with a ton of different it's got a ton of different buttons on it. It's got buttons everywhere. I love it. So you can set it up to run your hotkeys. Okay, but if your fingers are, you know, fat like mine, and sometimes you get to moving and doing, you could accidentally press the wrong thing and make a purchase. So really what we want to do is we want to go here. We want to do application settings. I'm not really trading right now. So I'm going to go to, what is that, hotkeys. We're going to disable the active trader hotkeys. Okay, so then that way, whenever I hit this button, I won't accidentally put on a trade. That happened to be a short, which I can't short because I don't have a large enough account to short with, because I'm not a professional trader, but I'm getting there. So follow me. All right. And once again, you know, every professional trader started from somewhere. Okay. All right. So we're going to get this out of here. And yeah, so look at here. We got that black box there, which means that large orders came in. We have these blue boxes here, which mean that there's a rest, which means that price moved up, and then all of a sudden it's just no orders coming in. It's just kind of going sideways. No orders coming in. That's a good thing, because that means that people aren't anxious to do something one way or another. And that anxiety leads to fear, right? So that can make the stock completely drop. It can also make it shoot up, but it can make it completely drop. So this is a good indication that we want to start paying attention. All right, so let me get this out of here. All right, now also in here we have next, coming on down, we have this red box. This red box for me is the indication that that there's absorption. So absorption is when, you know, you got a sponge. If you are dropping water down on the countertop, water just go everywhere, right? But if you have a sponge on the counter and now you're dropping water, water hits that sponge and it just soaks it up. It just soaks it up. All right, so large market makers and institutional traders is the sponge. All right, they have the They have the breadth, they have the bandwidth, they have the money, the resources, the clients. They are the ones that are able to be sponges. We are not sponges. You, with your $100,000, sir, are not a sponge. You need $100 million. Okay. All right. So I don't try to go against these sponges. I look for these sponges to soak it up. And then that's when I look to enter. Hey, what are you doing, Dirty Bear? Okay, so there's another indicator that I have set up. And so a Dirty Bear for me, according to my think script, is just when the stock has dropped considerably and it's a lot of volume, I do believe. I'm just curious. So let's go to what's going on currently and see what this Dirty Bear looks like. Yeah, so it dropped. And my think script, the way I coded it, it probably says that it's got to be the third drop, or it's got to be a drop more than so much percentage, something. I create a bunch of codes, and some of them work, some of them don't. But let's look at these. Let's look at the Dirty Bear that I created. All right, so if you had got in on this Dirty Bear, set your little stop loss. Maybe set your stop loss at the 1 standard deviation below the VWAP. All right, and then look, it came on up. Didn't it come up? Yeah, it came on up. All right. I also created this blue one, which this blue one doesn't seem to work very well. But this Dirty Bear works okay. On this chart, it worked once. Look, another Dirty Bear. Set you a little stop loss. And then, oh, that's a nice move there. Okay. But also, if you look on my contraction, and I hadn't looked to see when I get these gaps here, but when I get these gaps in my contraction, yeah, it's something's going on. I think it's creating a null, the expression is null or something, but it's not giving me data. I've got to figure out what it is. But either way, whenever I'm getting these blanks here, boom, it's usually a good place to enter. Blank, boom, good place to enter. Blank, boom, good place to enter. But so we got this blank here, plus we got a Dirty Bear, right? And the stock moved up considerably. The wick ratio plot, low here, maybe. Again, this is not an exact science. Look at this Dirty Bear. It dropped. If you had got in when it dropped, right, at that lowest place, it did move. It retraced the entire Dirty Bear, right? So, could you have made some money? Sure. Or waited for it to retrace and come back to it, bounce, and here we see that there is the spread contracted again as well. So maybe you didn't get in on this Dirty Bear. You waited for a retracement, a contraction of the spread, and that would be here. The spread started to expand above this lowest point right here. So it might have got in this point. Okay. Right it up there. All right. This Dirty Bear here, look, it just gave us a Dirty Bear. You had got in here. As soon as it got in, I could, with my hotkeys on, I might have just hit the button, go ahead and take an entry, regardless of what it's doing, and then expect for it to maybe come up here. I don't know. I'm not actively watching it right now, but that's kind of an idea what's going on. All right, so we're coming back here. We're talking about the trades I did yesterday, and I think we're as far as talking about this area. Okay, so we got that absorption here. All right, and so then the next candles that start to come in, means mid mark, right? So mid-size share amount, volume of shares, and it hit the mark, mid mark. This candle here hit the mark. This candle here was a fake because it dropped, but it didn't drop with any volume. And it was slower a little bit up top too. Same thing here. The stock started moving up, boom, drop. Pretty good one. I mean, it was a good size drop because it was the length of the trading range that we've been seeing, but it was with no volume. There was no larger orders at all, either. Here, SC, I started using some new abbreviations. So SC is spread contraction, right? So the spread contracted again here, So that was a good place to take an entry. Now here we have larger orders. So that means as we're coming across this break, this blue area, like all these blue, all of this is just rest, right? So if we draw another box, okay, we're going to say that the blue area is from here. It went down as low as this one, all the way across, still here, all the way across right here. Okay, so right into there. But we wanted blue. Okay. Somebody stole my blue. Okay. All right, so a little bit of different shade blue, but whatever. All right, so and below this blue, we have our absorption, right? So that's not a bad idea. That's not, terrible, because once again, we have the rest in here, but we have the absorption there. All right, hang tight. Yeah, there we go. All right. All right, so, and then the stock continued to move up from there. It did a little fake down, and then it worked its way up. Did a pullback, worked its way up again. All right, but the main thing I want you to take away from this is that it's important to look for and understand what the larger market participants are doing, okay? And to do that, I use the absorption, the red blocks that I've identified here. And then 2, I also like to look for the wick ups. I don't think, okay, here I put average trading range up, ATR up. So on this one, that stock, it was kind of moving here, and then it probably dropped down and then popped right up a full amount of this trading range. So the range on this candle right here, if you look up to the top, so I'm going to identify it. You look up in this area here, that range, you see the R says 0.33. So that's about 33 cents. And so you see it changes as you go through here, 39 cents, 47 cents, 49 cents. But so that average trading range that we're looking at, over these 1 minute candles for the past how many ever candles, I'm saying here that this candle started here, dropped down, shot back up that far. And so that's a pretty good indication that that we're looking at somebody about to win over somebody else. Just so happened to be that there was a fake out, there were stops taken, and then it moved back up. All right, so just give you an idea of what's going on over here. You see some numbers going. I look at the time and sales data. This here is my column that I use for shares orders going over 10,000. So that's a lot of shares coming in. This one here is like 2,000 to 8,000 or 2,000 to 10,000, 2,000 to 8,000. Let me adjust this one, 2,000 to 8,000. This is 8,000 and over. All right, and then this one here is just pretty much any size. No, wait a minute. This one should be all sizes, because this is the one that I don't really. No. What you doing, TD Ameritrade? You don't like my clicks? All right, so this is show all sizes, which I don't have on that often, and then this one is the larger one that it's like over 8,000. This one is 2,000 to 8,000. There we go. Okay, so when orders come over here that are really big, I run over here and I put in a black box to show that large participants came in. Okay, so as you're watching the stock during the day, you can look back and say, oh man, yeah, okay, large participants came in here, large participants came in here. And when it drops back down in that area later in the day, if large participants didn't come in, then you probably shouldn't be getting in over here. So, and that's the thing about trying to trade any support, is that you don't know how strong the support was. If it was large participants, if you had any resting, what it looked like, right? But if you are watching it during the day, then you can have an idea. It's like, yeah, okay, well, let me get in here. Or like I said, I would still investigate what's going on and see if it's a good place to get in. So this one here, this area here, this candle at 1432, there's a lot of volume there, but we don't know. I mean, was that volume, was that like sale, 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 sale? Because if it was, I probably wouldn't get in. I probably wouldn't take it. But if it was just like no volume, drop, no volume, drop, no volume, no volume, and then all of a sudden here, a lot of volume, all the volume came in here. This is absorption. This is large money, large orders. Then that would probably be a good indication that it's time to get in. And then also, if you look down here at my contraction, at my spread wizard, you see that here it got really tight. So here there's not a lot of gap between the bids and the asks. So probably a pretty good place to get in at. All right, let's see. I'm just curious of what's going on right now. What happened after that dirty bear? After that dirty bear, stock did continue to move on up a bit. I mean, say you had got in here, happened the same over here, right? We had this dirty bear, came down, retraced, moved up. All right, same thing over here. Dirty bear came down, retraced. If you had got in when it touched down here, or see this one here, touch down, wait till the stock gets above this candle, get in at 2340. All right, we're gonna see what that'll look like. Get in at 2340. If you put your stop loss down here, that'd have been 0.3% stop loss. Say the price went up to here, that's up 1.4%, right? So 0.3 to 1.4, what's that a factor of? 4, almost 5. So that's a 1 to 5, 1 to 4, 1 to 5 risk to reward. I mean, who doesn't like that? You know, risk $10, make 50, make 40. All right, but so that's what you're looking for. Get out of here. That's what you're looking for. Okay. All right. Well, I hope you guys got something out of this. I should have took that. Should have took it for about 1,000 shares. Made what, 39? Made 40 cents. 30 cents. $300. That'd have been good for right now. That'd have been real good. But again, I don't know what I'm doing, but I'm doing something. And I promise you, I'm gonna have this thing figured out. So join me next time I do this thing, and hopefully we can make some money together. And as I say on the Twitter, I hope you made $300,000 today. This is Eric. I'm out. Peace. Ba-da-boo, ba-da-boo, boo, boo, boo.